Good evening. This is the video newsletter for Buy Sell Short for Wednesday, December 28th. So what the hell happened today in the market, you're asking? Well, we were pointing to a nice little up open today. The futures were up nicely. European markets were up. Italy did a short-term bond auction, and it was very well received. They only had to pay 3% and change, down 50% from what they paid a month ago. And if you recall, the big sell-offs we were having a month ago were because countries like Italy and Spain were paying such a high interest rate for their bond offerings. And here we have news that the bond offerings are down big, and the market reacts with a big, FU. The news we had, though, was sort of tempered. Just like everything is these days, we get really good news and somehow they spin something else negative. And the negative aspect of this was there was a report out that last night European banks record overnight lending 400 billion plus, and the banks were not lending that money out. So that sort of wore on the market throughout the day, and then those big early gains we had in Europe ended up turning into losses, and then it was just too much for U.S. stocks, especially with one of the strongest tax selling biases we have seen in the market, especially in small cap stocks over the last several years. I cannot remember there being so much selling in small cap stocks, especially this last week of December. Just very, very frustrating. And essentially what it does is keep you out of the market. Right now, the only thing traders are buying are stocks that are up 10 or 15% with volume and chasing those stocks. Stocks that are getting sold off that are down 10 or 15%, traders are scared of them because they don't know if more tax selling is going to come in or if the robots are going to jack them higher. They just don't know. Russell, as you can see, we looked great going into yesterday's session. The same thing on the Dow. We had that triple top. Actually, let's look at the Dow real quick. We had that triple top breakout on Friday, but, yesterday we sort of gave it back. We held up pretty decently, and then today we are down. We've got support right now. We've got a lot of upward trending moving averages. 8-day, 20-day, 200-day, 50-day. We've got a golden cross looming possibly in the next week or so. But, there's still that negative bias hanging out over the market. Tomorrow, of course, we have another Italian bond sale. This is for longer-term debt. And actually, that was the excuse used for that late-day sell-off. Worries that that bond offering tomorrow won't go as well. So if that offering goes well tomorrow, you're going to be looking at a gap up in this market, and it's really, does it surprise anyone? We had the market breaking down a week or so ago under the 50-day moving average, and then the next day they gapped the market up 200 points. Here we are looking like we're going to break down again. Things look negative. Everyone's over on one side of the boat again. They're short or they're all cash. So, hey, how about gapping the market up tomorrow on some bogus news, which will probably be, news that the Italian bond sale goes well tomorrow. That will be the driver in the market tomorrow. Oil prices, surprisingly, metals were down big today, even with Iran going out and saying they were, they'd shut down the Gulf if any sanctions were issued against them with regards to oil. And we actually had oil prices drop on that news. Gold down big. So, metals just taking it over the head. And again, probably just more tax selling. Guys buying the top a few short weeks ago, selling out and taking their tax losses here is probably the only logical explanation right now. As we said, we've got a really strong band of support right now from the 11,900 area to the 12,100 area. So let's see how that acts. 15-minute chart, you can see, we've got that 12,100 support area. We're decently oversold, at least on the indicators like RSI and stochastics, but we could see some downside. Now, if we get bad news from Italy tomorrow, all bets are off. They'll just sell this market into Friday. Simple as that. This is not an easy market to trade. I don't care what you hear anywhere else. This is not an easy market to trade right now. Case in point, SATC, obvious tax loss selling. Yesterday, they just pulled the rug out from this stock. Free fall all the way down to 48 cents on decent volume. If you're in this stock, you're going, holy shit, what shoe is about to drop on this stock? So what did the stock do today? Traded all the way back up to exactly where it started its sell-off yesterday. Another one to look at that did the exact same thing, USAT. This one was a nice little runner yesterday, 113, and then they dumped it into the close yesterday. This morning, traded as low as 98 cents down to that stop-loss level. What happened an hour later? Voop, all the way back up to $1.10. 10% intraday rally. We're actually starting to see this a lot, which gives us some pause or cause for optimism. Look at Edgar, EDGR. They hammered the shit out of this one yesterday, and look, voop, all the way back up again today. So the robots are out there. They know there's Taxol sellers. They sniff any sort of sell pressure in a stock. They go after it, grab the shares, and jack them back up. How do you trade a market like this? Very, very tough. I mean, this is one of these markets, these rare markets, where if you use stops, you're damned. If you don't, you're damned. I.e., you get stopped out an hour later or the next day, the stock's higher and running. If you don't stop, the stock keeps falling. Case in point, CYTR, you know, that chain around our neck over the last month or so. It's just a difficult market right now. All I can say is every time we say there's some positive tones or notes to this market, they come around and bash us the next day. But we are at least seeing these stocks starting to bounce back, dip and bounce. So we've got 2 more days of this bullshit, and then next week traders can buy these dipper stocks with some confidence that there's no dumbass tax sellers hanging off on, you know, the sidelines waiting to jump in. Those guys, this is what they've done over the last month on numerous stocks. Now, there is some nice pockets of strength. PEIX, nice 25% move today, and its peer BIOF. We had some very nice scalps on these in the chat room. And again, this stock, BOIF, PEIX, HDY on the pop scan, definitely check out the pop scan. That is going to be our focus come mid-January. We're going to be putting more and more emphasis on these intraday trades, and the pop scan, there is at least one big mover on this list almost every single day. It's picking up these big movers, and right now the only thing traders are interested in doing is chasing stocks that are up big and looking for an extra 5 or 6%. EMKR, though, is a little warning sign. They were chasing the stock at $1.16, closed at 90 cents. So, you know, when you jump into these stocks, if you get 5, 10%, take the 5 or 10% right now, at least over the next couple of days. That is what everyone is doing. They're flipping these shares. It's almost a game of hot potato in a lot of these stocks. They go into these high volume trades, they push up, and, you know, they grab the hot potato holders for as long as they can and then pass it off to someone else. Don't get caught holding the bag, as they say. Take the quick flips like we did on PEIX, BIOF today. But actually, those 2 stocks going into tomorrow, definitely a couple to watch, as well as some of the other stocks in the pop scan tonight. Again, you know, we got hurt buying our January popper plays early this year. As I've said, this is the worst December we've seen in small cap stocks in quite a number of years. And actually, this is the worst 2-day trading period I can remember after the Christmas break. It wasn't even this bad in the market tank of 2008, just to give you a point of reference right now. So, you know, we made a mistake going into a lot of these stocks early, you know, expecting the same seasonal trend we've seen over the last couple of years, and, you know, we got beat over the head. You know, the stocks that we ignored putting stops in, they've made us pay. So, if anything, we're going to get some nice lessons over the last 3 weeks, our trading over the last 3 weeks, that hopefully we can, you know, use to our advantage in 2012. You know, as I've told traders over the years, the best trading lessons you will ever learn are the losses that you have in trading. As long as you learn from them, we've learned some very valuable lessons over the last couple of weeks, I will say that, and we're going to apply them in 2012. But irregardless, next couple of days, once we get this through this crap storm, hopefully we will see a nice move in this market. And I mean, the indices are coiled for a move. You know, we continue to have this European nonsense overhanging us, and, you know, hopefully we get some positive news out of the Italian bond offering tomorrow. If we do, we'll have a nice gap up, and we'll probably see a lot of these small cap plays get a positive bias in tomorrow's session. So that's what we're going to be looking for, and just trying to hold the line over the next 2 days and maybe start to get aggressive on an intraday basis next week, so that we can buy some of these dippers. And the only thing we have to worry about is news getting leaked to insiders, not worry about some tax loss selling fund coming out of the blue and hammering the stock because they don't care what price they're getting out at. So that's what we're looking at right now. If you've got any questions, feel free to send me an email, feedback@buysellshort.com or .net. Any questions on positions, what to do, etc., just shoot me an email. Otherwise, I will see you guys in the chat room tomorrow. Good night.